What's happening, all? Welcome to April 2025. And what we're looking at right now, yesterday, things started off really awesome. Mortgage-backed securities took off, broke out that little channel we were staring at, just started cranking. And then the Chicago PMI Purchasing Managers Index came out and showed, oh, things are a little bit hotter on the inflation side of stuff. And it kicked right back down, went straight into that channel, and then closed, kind of above. I started playing with it, widened it out a little bit, closed above that, and kept the downward trajectory. But just right on top of that channel is where it landed, and I'll show you that here in a second. So today we're opened up a little bit better. We'll see how the day goes on, because yesterday opened up really, really awesome. As the day went on, it continued to just erode. So we can see that maybe possibly following that same pattern today. Not sure, but we had see here, this week we still have more manufacturing data coming out, job openings. In fact, I think the job openings are out already this morning. Let's take a look at that. Yes, and we've got, yes, the S&P Global Manufacturing PMI is out, and it's actually slightly hotter than it was before. So that could inflate to have a little bit of erosion on the market as it opened. Manufacturing index, that actually showing the ISM showing just a little bit lower than what we had last reading. The job openings, those actually came in lighter than what we anticipated. We anticipated 7.762 million. We got 7.568 million. So slightly lower, not a ton. Construction spending is actually up a bit. From before is a negative 0.5 reading. Now we anticipate a 0.2 reading, so at least a positive. It actually came in at 0.7. So construction spending's up. That, all those things, we'll see how those play out into the bonds. Later on in the week, we've got, let me see here, non-farm payrolls are going to be hitting. We're going to get some factory orders. ADP numbers are going to be hitting. Initial claims. And let me see here. What else? We're going to have the Chairman Fed Powell, and spouting off in the news here and there. It's going to be seen. So let's look at the charts and see what we're staring at, so we know what we're at least where we started and where we're probably going to end up. At least, see if we can get this thing to work. There we go. So as you can see, here's yesterday. I'm going to zoom in on this a little bit more for you. Opened up here, and it had a big jump up open. And those gap opens, tend to want to close. So it worked its way down. It closed and covered, so that you can see the wick came down to where it went back into where it was the day before, and then to retrace back right up to this point. Now, I had showed a little bit narrower channel last week, thought maybe this might be our top of it, but it still went down into it, right? So even in the narrower channel, or even we look at it from a higher channel perspective, either way, we're still in it. So if we're going off the top of this wick and seeing how and bouncing off of this one, we're closed in it. But now we had a gap up opening, and we continued up, but then we've also seen it come down. So we might actually see it bounce off of this channel. But look at where we're coming up on. We are coming up on this block. This has proven to be that really, really strong block, right? And even when we get above it, we got our other part of the block. But this has actually been a pretty formidable force, this whole block here. So we're coming back to that. These might be the lowest rates we see, whether it be here or up in here at any time in the near future. If we see them go to that point, we're going to have some sort of drive economically to force funds to go into the bonds. Is it possible? Yeah, it's highly possible. With all the volatility in the markets, all these people worried about tariffs and what's happening. But if you start looking under the hood of the tariff thing, you start finding out some of these things are working out. There was news of Rolls-Royce is moving some manufacturing to the United States. Don't just think about Rolls-Royce as the luxury vehicles for all these influencers and some bitches out there that want to make you think that they got all the money in the world driving around the Rolls Royce. Their major manufacturing is for jet engines. So the engines that they do for defense, especially for your military aircraft, looks like they're going to be moving a lot of that here because of the whole tariff situation. So this is actually kind of working. I'm sure there's going to be difficulties. It's not going to be simple, but it's an equalization of what's happening in the world. Now, this just what I'm seeing, some of the stuff that I'm gathering doesn't mean that I'm 100% correct in it. So some people may have a different perspective, and that's fine. We'll just see how it all shakes out. We're in a little bit different spot than what our nation has been before. We have been putting capital out. Now we're trying to bring capital back in. We'll see how it all plays out. it's better than what we've been doing, I think. Just make some sort of move, see what we can do to shore up some of the economy of our space, right? So that's what we got going on right now. Doesn't look too wild. I mean, when you consider back where things were even pre switch of administration, our market's actually fairly stable as far as the mortgage-backed security is concerned. And if anybody's telling you we're going to see fives again, not in the next 4 years, I guarantee that. Not a guarantee. Anything can happen, right? But I don't see that happen, especially in the next 4 or 5 years. Grab what you can grab right now. There's a lot of speculation out there of what's going to happen as far as the housing, as far as where we're going to have a bubble. I'm going to do some more research in that. Maybe put together something in the form of a big webinar for everybody, so we can all get on and talk about it. Let's just have a big discussion, a debate, if you will. But also know I'm coming up on next Friday. Actually, this Friday. Dang, it's happening quick. This Friday, I'm going to be on there's a summit that I'm going to be doing, virtual summit. Register, jump on. We're going to dig into this stuff a little more, help people understand why interest rates are not so big damn a deal. Thank you.